Okay, so I've literally got like 8 pages worth of notes in this bad boy um, for what I'm going to be talking about right now. This isn't bullshit. I'm not just coming up with numbers and random stuff. This has actually taken quite a bit of time. I've been working on this for about 2 weeks, trying to get my facts straight and get things sorted out. So here we go. A lot of people are going to wonder what's going to happen in 2021, what's going on with the market, where are we going to end up? And they think that we're going into a recession kind of like we hit in 2008. I'm going to tell you, I don't think that's the case. So the 2008 collapse didn't happen overnight. It was several years of policy and economic changes that led to that point that caused that collapse to happen. Let's look at what those were. It all goes back to the 2001 dot-com blast. If you're a young person, you might not realize this, but when tech companies and the internet started rolling, a lot of people started buying into tech companies thinking, hey, this is the future. All of these things are going up in value. They can't fail. Well, a lot of them failed, and that caused the economy to crash. When that happened, the Federal Reserve decided to lower interest rates and try and stimulate spending at that time. That was the beginning of this whole mess. So we got these things as 2005 approached that were called ninja loans, no income, no job or assets. So pretty much you can go out and get a loan and not have it secured for anything. And they were giving loans for up to 100% of the value of a home because the market was going up and they thought that this would be a good idea. Turned out it wasn't that great of an idea. But what happens is a lot of people are going out in the market buying one house, two houses, three houses, whatever have you. And it looks like the economy is coming back up and things are good because people are buying houses. You know, the housing market is strong. So what does the Federal Reserve decide to do? They want to jack up the interest rate again, a little by little. And over time, when people have to refinance their houses, they're not really able to afford the new rates because they don't have any equity in their homes. These people ended up defaulting on their homes and going into foreclosure. Not really great, but it started happening a little bit at a time from 2005 and more so as we approached 2007 and later 2008. When it happened, people thought, yeah, it's just a correction. It's not a big deal. We're going to keep going up. And it kind of was at first. So what banks were doing at that time was lumping a lot of these mortgages together and selling them. And what they would do is if they had, let's say, 60% A lenders, 20% B status loans, 30% C, D, E, F, whatever have you, they were able to get away and call those AAA loans or whatever have you for the most part, because the majority of them were AAA, but then they would scrunch in a bunch of crappy loans in there. At that time, they were allowed to throw in quite a few of the crappy loans and make it look good and package them and still keep that AAA rating. And they were selling these combined mortgages over to other markets and saying, hey, these are AAA mortgages. Don't worry, they're secure. But a lot of them started defaulting. That was felt in the economies and that was reflected in the banks and all of the banks in America, and there were over thousands of them. They started reflecting that in their annual reports, and the profits and values of those banks went down because the assets that they were mortgaging didn't have any value, so they were giving out loans on garbage essentially. After the market bottomed out in 2008, they had over 11 million people without jobs and over 3 million people that were served foreclosure notices. Now, even though the economy kind of shit the bed in 2008, housing prices didn't really reflect that until a few years later. It was about 2011, 2012 that the real estate prices bottomed out and started to rebound. So after 2012, what they decided to do was apply more stringent rules to lending and try and keep the risk down for the banks and lenders that were giving out mortgages after this point. Keep in mind, these are all numbers for America because that's what we're looking at. In Canada, our numbers weren't nearly as bad, and our housing market recession, or whatever you want to call it, wasn't that bad at all. House values did go down, but the amounts that went down were nowhere close to the amounts that the US lost. I'm going to go into that in a minute. The way the interest rate works for you guys at home is when an economy is doing really poorly, the interest rates are down. The government wants to try and incentivize spending in those times. So when an economy is doing really well, that's when the government thinks, okay, we can start charging higher interest on people because they have more money right now. So economy good, interest rates go up. Economy bad, interest rates go down. From 2018 to 2019, we started hitting those levels that we dropped off at in 2008 in terms of housing prices and the housing strength in our market. We had recovered from the last few years and things were looking pretty good, so the market was quite strong. Home ownership was extremely high. Jump ahead to 2019 and we pretty much had the strongest economy ever in America. You can probably thank Trump for that, even though you can't really thank him for too many things. But 2019 was kind of weird because even though the economy was strong and doing really well, you know, all sectors were overperforming, the interest rates were still kind of low. Jump around to 2020, we get the Rona and it's a shit show. Interest rates were already low and now they're cut again. They're floating like close to 0%. It's the cheapest that money's been in maybe forever, I don't know. Seems like forever. Looking back at what I can find, I don't think interest rates have been this low or rates this low have been this easy to get. Home ownership is up again. It's booming around that 2008 level, which is extremely high. So in America, mortgage delinquencies went up and the government had to start this program. In Canada, we started our own program, but let's just talk about America for now. So what they've done in America is they have a moratorium on foreclosures, which means that these homes don't enter into a foreclosure process, they enter into a forbearance process. It's completely different and these people don't actually lose their houses as of right now. What that means is foreclosures are banned temporarily and the earliest that these people might get foreclosed on is maybe early to mid 2021. So if we look back to 2020, it's worse than 2008. In September 2020, we had over 12.5 million people without jobs and over 3.5 million of them were in this forbearance program. In 2008, what happened was that house prices were starting to go down and interest rates were going up. So when people were refinancing, they couldn't finance that equity in their house because there was actually negative equity in their house and they had to pay money to refinance. It was kind of an odd situation, but in 2020, we have the opposite happening. House prices are going up, but interest rates are going down. The people that are coming to term and need to refinance the remainder of the balance on their house, they actually have equity in their house and it's cheaper to borrow the money at this point. So if they qualify, it's no problem. So in 2008, interest rates went up, house prices went down, job loss went up, foreclosures went up, and there were no forbearances. In 2020, interest rates are down, house prices are up, job loss is up too, just like 2008, but there aren't any foreclosures at all, and forbearances exist now, so that's way up. So in 2008, when people were just walking away from their homes because they didn't want to take on extra debt, we're seeing the opposite of that. The people that own houses in 2020, if they can't refinance, they can sell their properties and make money. That was not an option in 2008. So how America differs than Canada is in Canada, we have like 5 major banks, right? It's quick and easy, you know, it's not hard to figure out, but we also have a federally mandated program to control all of these banks. It's all a national program and it's not fractured and disjointed across province to province, unlike America where every state is ruled by a different governing body when it comes to their financial institutions, and they have different ways of having laws and keeping laws for those banks and lenders. That fragmented approach is brutal, and what it's done is it's changed the laws across 50 different states and there's no consistency. In addition to that, there's over, like, there's thousands of different banks out there. It's kind of like the wild, wild west when it comes to banking. It's ridiculous and it doesn't really make sense to me. But America's an extremely capitalistic country, so they're going to try and make money any which way that they can. Not to say that Canada's not a capitalist country, because we are and we like money too, but you know what, we're just a little bit smarter about it. That's why when 2008 happened, we weren't hit nearly as hard, because, well, we protected our people by protecting our banks. Even now, like if you look at mortgages now, we have to get insured mortgages if we put less than 20% down. What that insurance does, it doesn't really protect me and you or Johnny Homebuyer. It protects the banks in case we default. So even if we start defaulting, they have insurance. So what are the outcomes? If people don't get their jobs back, which is really highly unlikely because a lot of these people have lost their jobs for temporary points, but if they don't get their jobs back, then foreclosures are going to go up, supply goes up. If there's not enough buyers in the market to take up that supply, then prices are going to go down. We might see a crash, or maybe it's a correction, right? The way the market is right now, there are so many buyers out there that we could see an influx of supply and still be quite healthy in terms of our market, our housing market. The next thing that could happen is, after all of this stuff is over, everybody, or the majority of people, get their jobs back, they go back to work, and it's totally cool. Everything is gravy and nothing really happens. All that's going to happen is that the housing market's going to keep jumping up. The worst thing that could happen is a lot of people lose their jobs, maybe even a few more people lose their jobs. The government says, hey, we're not helping you at all, we're taking all your stuff. And because there's so much job loss in unprecedented amounts, and maybe some people who are currently in that market that aren't in that forbearance program, or buyers looking to buy, they might lose their jobs too. That might cause the inventory to be totally flooded, pull buyers out of the market, and then you might see a crash. What is the likelihood of that? No one really knows for sure, but in Canada, it seems highly, highly unlikely. I mean, we're tied into America. We have to be. A lot of our economy, GDP, and exports, imports are coming from America. So our economy is linked with theirs. But overall, if America slows down, we might not necessarily feel it at this point, or not nearly as much as they'll feel it. So in where we live, in the city that we live in Kamloops, our house prices went up about 25% over the last 12 months. So let's say we hit a recession and house prices go down 10%. Is it going to be the end of the world? Well, no, we're still at a net gain of 15%. The other thing to note is that in Canada, we don't have a forbearance program. Foreclosures are still happening, and they're not happening that much. So they introduced this program where people can skip out on their mortgage payments, well, delay their mortgage payments for 6 months if they qualify, if they have enough equity. But even with that program, and as harsh as times have been, we haven't seen many people fall delinquent or be taken to foreclosure, not nearly as much as the 2008 levels. It's essentially what we have to do is kind of watch what the US is doing, but also kind of watch our own market too, and proceed with caution. I don't think that the way that our market is, that we'll see a substantial drop in prices like people are talking about, saying, oh yeah, the sky is going to fall because whatever. Like, where are they getting their numbers and what is their data? They don't have data. So be careful who you listen to. Be careful who you let influence your decisions and your mind. I'm not saying this as a realtor. I'm not trying to sell anybody on this. I'm just trying to explain to them and you guys at home what happened in the past and what's happening now. There is a degree of caution that we should move forward in, but that's with anybody buying a house at any time. It doesn't mean that everything is going to collapse and it's going to be the end of the world. People think that we're going to be out here in bearskins fighting each other with crossbows, and like, what? I mean, come on, really, right? Like, all we can do is look at some information, try and figure it out, see what the most logical steps are for you, and help you move forward. If you need housing, you need housing. There's nothing you can do about it. All you can do is try and make an educated and informed choice about how you're going to secure that housing. That's our job as realtors, to try and educate you. So don't just listen to people on Facebook posting and having their opinions, because yes, everybody in this country, and thankfully, thank the Lord that we're all allowed to have our opinions, but if you're going to share that opinion and like violently argue it and believe in it wholeheartedly, you owe it to our society to have some sort of informed opinion. You can't just be shoving that down my throat and in my face without any kind of evidence or numbers or proof. And that's all we're trying to do, is just show you some idea of what's happened, what's happening, so you guys can have a better opinion and make your own conclusions. Don't listen to me, don't listen to anybody. You got to come up with your own idea, but these are some facts that might help you do that. All right, so thanks for tuning in. I'll try and put together another video for you that helps you learn and, you know, be a little bit more informed and make better choices. Well, at least when it comes to real estate.